Welcome to another S&P 500 analysis. Today is December 12, 2021. The S&P 500 did not make a new all-time high last week, but it did close with a new all-time closing high. And it was the only major market index that closed with a new closing high. Does that mean the S&P 500 has topped? In this video, we will look at the indexes, the sentiment, and the market internal to see if the S&P 500 has made a top. Stay tuned. On this weekly chart of the S&P 500, we notice it closed the week with a new weekly closing high, but it did not put in a new all-time high. It had a range of 173 points. It gained 173.59 points, or 3.82% for the week. It closed back above this 10-week moving average and back on a one-time framing up. And it is still above the 40-week moving average and in the upper portion of this multi-year price channel. On a weekly basis, the trend remained to be up. Now, before we look at the price action in more details, let's go take a look at the sentiment and the market internal and see what they are telling us. Looking at this sentiment chart, we see the S&P 500 closed with a new daily closing high, but did not make a new all-time high. The VIX, after moving above this 2030 zone the prior week, it is back below the 20 and closed at 18.69 on Friday. And the put-call ratio is back under the 0.75, and it ended the week somewhere around 0.68. The sentiment chart is telling us the market participants are moving back into the risk-on mode. On the internals, the up-down volume ratio was quite positive last Monday and Tuesday. It was almost 4-to-1 and 5-to-1 in favor of the up volume respectively. Now, we did see some selling on Thursday with the up-down volume ratio at 3.4-to-1 in favor of down volume. And notice it was only 1.19 in favor of up volume on Friday. We also saw the daily advance and decline was strong in the beginning of the week, but Thursday the declining issues outnumbered the advancing issue by 1,638. And look what happened on Friday when the S&P 500 closed with a new all-time closing high. There were 180 more declining issue than advancing issue. This is a negative divergence, and it is not a good sign for the index to close at a new closing high. And look at the New York Stock Exchange new high, new low. While the S&P 500 closed with a new closing high, there were more 52-week lows than 52-week high, another negative divergence. And the NYSE cumulative AD line encapsulates the internal weakness of the overall market by the huge negative divergence. Now let's see how the Nasdaq market internals look. First of all, the Nasdaq 100 closed the week with a gain of almost 620 points, or 3.95%, had a range of 855 points. Similar to the NYSE, the up-down volume ratio looked positive at the beginning of the week with a 4.26-to-1 in favor of up volume on Tuesday. Then it deteriorated back to in favor of the down volume on Thursday and Friday. Now, the daily advance decline also showed the same behavior. There were 2,445 more advancing stock than declining stock on Tuesday, but a mirror image on Thursday with 2,473 more declining stock than advancing stock. And on Friday, there was a negative divergence from the up-down volume ratio and the daily advance decline. Now, for those that believe the Nasdaq market is still in a bull market, take a look at the new high, new low internals. On Monday, the Nasdaq 100 was up 134 points, or 0.85%, and there were 658 stock make new 52-week low, with only 40 stock make new 52-week high. The entire week, only on Tuesday, the new high outnumbered the new low by a margin of 5. Only 74 stock make new 52-week high, while 69 stocks make new 52-week low. And this occurred while the NASDAQ 100 is up 479 points, or 3.3%. Certainly, this does not look like a bull market with such a lackluster number of stocks making new 52-week high. And needless to say, the NASDAQ cumulative AD line is near the recent low, while the NASDAQ 100 is knocking on its all-time high. And this negative divergence is screaming out to us that the risk is on the upside. So far, we saw the market participant are back in a risk-on mode, but we also noticed the number of stocks making new 52-week low is expanding, and the cumulative AD line is not confirming the recent rally from the S&P 500 and the NASDAQ 100. Now let's go take a more detailed look at the index's price actions. Now looking at this daily chart of the S&P 500, as you can see, it's getting very close to this all-time high, up at this 4743.83. So for the coming week, watch for a continuation move up and see will it be able to take out this high and close at a new all-time high. And if it does, then the next potential target could be this 127 extension up at this 4867. So it's close to 4900 level. But if it reverses back down, then look for this gap to get filled and also a pullback to retest this 4545 area, this level here. And if it doesn't hold this level, then look for it come down to eventually fill this gap here. And that could be also in confluence with this trend line here on this price channel, this mid price channel, and also could still be well within this retracement zone. Okay, so we could get a bounce off of that from that trend line and come back up. And looking at this SPY, the ETF for the S&P 500, so if it come up to this high here, if it break above this 470.65, then look for this high to get taken out. But if it reverse back down, watch for a little chop, and then it probably will break this 466.55. Then look for this gap to get filled here during the on the way down. Might get a little bit of a support or a little bit of a bounce here around this 461.53. But eventually, we are basically looking for the SPY to retrace back down to somewhere around this 451, essentially these low here, if it breaks down and come back on a pullback. So that's basically what we'll keep an eye on, is to pull back into this area here near this 451 area. And for the NASDAQ 100, the NASDAQ 100 is underperform or lagging behind the S&P 500 a little bit. But if next week, if it could take out this 127, 16,445, then watch for a move up to possibly retest the high here at 16,744. And if we could take out a new high, then look for this 127 to become a new target here, this 127 extension near this 17,384. And that is also in confluence with this 1618 extension. And this is based on this particular Fibonacci retracement. And this right here is based on this one. Okay, so these two levels could be in confluence, and that could provide a relatively strong target for the NASDAQ 100 to try to hit, and that would be this 17,400 area. Okay, now that's only if it could make a high here, right? That's a big if. But if it decides to pull back, watch this gap to get filled, and then once again pull back down to somewhere around this 15,345, and that could be also in confluence with this trend line here of this channel, the lower trend line of this channel. And this also could be, inside of this retracement zone, right down at this 38.2. You could get a bounce right off at that retracement zone and bounces back up. So for the QQQ, the ETF for the NASDAQ 100, we'll be watching these upside potential here at this 401 essentially. So this area here to see would it be able to break above that. And if it does, then we could look for the possibility to come up and take out the high. But if it unable to get above this 401 and decide to pull back, then watch this, these level down here at 387.53. And that is essentially this gap here to get filled, right? So let me clean this up here. This gap here to get filled. And once this gap is filled and doesn't get a bounce back up, then look for a 382. So essentially entering this composite value area here at this 382 and watch these low near this 380 area. And for the Russell 2000, we thought it was going to pull back and trace down to this 2134 when it did this look above and fail. Apparently, someone decided to front run this level here and try to push it back up. And it looks like it was trying to get up to this 2317, but right now it appeared to be pulling back again. So if the pullback continue, look for this 2134 level to get retested. Basically, come down and see would it be able to hold. And if it doesn't hold, then we're essentially looking at this level down here at 1935 or 1950. This 100% extension, this major move here of this range. And here looking at the IWM, the ETF for the Russell 2000. So first level we're going to keep an eye on the upside is this composite point of control at 221.70. You see would it be able to get back above that? If it does, then look for this 228 and 229, possibly somewhere around 230. Essentially you're looking for this gap here to get filled, and that would be on the upside. But if it's unable to get above this point of control, then look for it pull back to this 214.45 and possibly work itself down to this 204.84 or the 205 area. Dow Jones Transportation is still trying to work itself back up to this closing high here, somewhere around 17,039. Right now it is holding above this 15,500. So we're essentially watching to see would it be able to come up to this high here. But if it resort back and pull back once again, then again we be watching this retracement zone. All right, so would it break below this 38.2 underneath this 15,610? And if it does and get below this 15,500, watch this gap here to get filled, and that will bring it down below this 15,000 area. Then we'd be possibly looking at a full retracement down to this low here near this 14,000 level. And for the Dow Jones Industrial, it might be coming up to this trend line, possibly come up to test this all-time closing high. Remember, we are looking for a retracement back down to this 33,800 on this look above and fail. And as you can see, this, similarly to the Russell 2000, someone sort of front run this retracement here. And right now, the Dow Jones Industrial actually broke back above this balance area and try to make a move up. So this would be a 100% major move extension once again if we could get back above this high. So we'll keep an eye on it to see would it be able to come up and make a test off this all-time closing high. But if it pull back to this 35,150 and get back into this balance area, then this time around we'd be looking for a complete retracement of the 33,800 and possibly even dip below it, and it pushes down to somewhere around these 32,600. And here the NYSE Composite, and that's a little bit of a broader market index. And you can see that again, it came back in and tried to retrace down to this lower level of this this balance area. and it broke back above it. So right now we'll see would it be able to pick out this high here and come up, essentially get above this 16,932 and see would it be able to work itself back up toward the high. But if it dipped back into this balance area once again, dip below this 16,708 and look for retracement once again down at this 16,094 area. And looking at the US dollar is still chopping around near the 95 area, this basically the zone here. We're basically still looking for the dollar to make a move up to this 97.79 area. Now remember, this Wednesday there's the FOMC announcement on the latest plan on the tapering and also the interest rate hike. So that could move the US dollar, so be careful. And for the crude oil, after it dipped briefly below the $64 level, made a nice quick snapback, and right now it's hovering above the $70 a barrel level here. So watch the crude oil to see would it be able to make it back up to this near this $77 a barrel level and see would it get a little chop and then push up again. So keep an eye on that. If it breaks below this 70 level again, then look for it to come down to this 61 area. Looking at silver here, it seemed like that it might have found a little support at this $22 level. So we'll see would it be able to get a bounce and get back above this 22.72 and try to make its way back up to this 24.70. But if it breaks this 22, look for this 1960 level to get tested. And here we are looking at gold. You can see gold is still trying to get back above this 1804. Right now it might come down and test this 1760 once again. So these are the two critical level now, the 1804 and also this area here somewhere around 1760. So if it breaks below the 1760, look for gold to come down to this 1716 and this 1677 zone. Okay, but if it could come back to this 1804 and break above it, then look for a move back up to this 1846. So this is the key level here, these two key level. Finally, looking at the E-mini S&P 500 future, the ES. We are still waiting for the ES to come up and tag this all-time high. The reason for us to monitor this high is because it made a poor high, and this usually indicates the auction was not finished, and the price will likely come back to this level and finish the auction by taking out the high. And when that occurs, then the S&P 500 will likely to make a new high as well. We also noticed the last 4 trading sessions, the ES is in a balance area. After it has been in a balance area for a while, price usually break out from this balance. And if it breaks above, then we'll be watching for this all-time high to get tagged. But it breaks below, then we're basically looking for all these unfinished business to be taken care of, and that will pull it down to below this 4,500 level. Let me summarize this weekly S&P 500 analysis by looking at this chart of major market indexes. As you can see, the S&P 500 was the only index that closed with a new high on Friday, and it did it all by itself. No other major market indexes confirmed it. Usually, this type of a non-confirmation signals a possible top. But with a poor high, all-time high printed by the ES, the E-mini S&P 500, it leaves the door open for another high before we start looking for a top from the S&P 500. In the meantime, continue to be cautious as the new high, new low, and the cumulative advanced decline line are telling us the market is getting weaker, and don't be fooled into believing the market is in a strong uptrend by the false new high from the S&P 500. I hope you find this video to be informative, and be sure to click the thumbs up to help me promote and share this video. Thank you for watching and stay safe.